Hello, welcome to IDT Talks. My name is Anastasia Lavrina, and today we have a very special guest. Joining me from Lahore, Pakistan is Syed Mohammad Osama Rizvi, economic, geopolitical scholar and energy analyst. Well, welcome to IDT Talks.
No problem at all.
Thank you very much. So, how do you assess the current state of the global oil market? What are the key factors driving the fluctuation in oil prices at the moment?
Well, that is a very good question, and it also requires a detailed answer. There are multiple factors at the moment. There are a few factors that are entirely bullish, then there are a few factors that are entirely bearish for the markets. Let's talk about the bullish factors first. For instance, Trump's arrival into the presidential office can herald into another inflationary shock in the world, which can increase oil prices across the board. Other than that, we have the unwinding of the OPEC plus production cuts. Some expect that when that happens, the oil prices can sort of stabilize and start to move on the other end. However, I am basically interested in what are the bearish factors, and they are a lot. For instance, let's talk about the oil surplus. According to various organizations, we might see an overhang of supply to about 1.2.5 million barrels per day to 1.8 million barrels per day, and the demand, on the other hand, is not expected to rise as much. You look at Chinese oil demand. China recently added 1.15 million barrels per day of oil to its inventories. Now, if oil prices are set to rise, China's oil demand will fall further. They will tap into their inventories rather than buying more oil from the markets. That will further put down the pressure on the oil prices. And we also have a global economic slowdown, if not a recession. If you look at the US economy, you look at the Eurozone economy, and you look at the Chinese economy, on the surface, things might seem okay. But when you look at the real economic indicators, such as the consumer health, such as the debt-fueled growth, such as Chinese manufacturing sentiment or new orders or export growth, which is, by the way, is expected to fall this year. So I see a lot of trouble, both in demand and in oversupply. So I remain bearish on oil markets, and these are some of the factors you should be looking at.
Let's talk a bit more about the Trump's administration and its new energy policy. Donald Trump came to power and started his second term as 47th President of the United States of America under the slogan "Drill, Baby, Drill." So, how did the Trump administration's energy dominance policy impact the U.S. LNG export? And what were the long-term implications, what could be long-term implications for the global energy market?
Let's talk about Trump's drill baby drill policy first. We at Primary Vision we track the U.S. oil supply by the frac spread count, and recently, if you look at the number of active spreads, that has fallen. Despite that, the U.S. oil production has continued to grow. However, there seems to be a disconnect between rising oil prices and more rigs and more fracs being added to the overall equation. That is because the U.S. oil suppliers, the big oil, as it is said, they're mostly focusing on fiscal consolidation, shareholder return, and due to the technological advancements such as lateral drilling, horizontal drilling, we have seen that organizations have been able to produce more by spending less. So that is why I believe, and then of course the global oil demand is a big factor, and I believe that is why that big oil or drill baby drill might not happen with the same intensity as it happened before. To answer your second question, the second part of the question in terms of LNG, US has become a key player in terms of the global energy markets, both LNG and oil. If you look at the EU's trade with the US in terms of oil, so EU imported around 43% of US oil exports. Overall, European Union has become, and North America has become the largest bilateral trading partners, with 57 million tons of LNG being exported by the US to Europe versus 13 or 15 million tons from Russia and 18 million tons from 18% from Middle East. So we see that there is a big divergence happening in the global energy markets where there we see consolidation amongst the Western allies, But at the same time, Russian oil sanctions don't seem to work as much as well because those hydrocarbons have been welcomed with arms wide open in Turkey, in Malaysia, in India, and in China. So there seems to be a big divergence going on, but it seems to be working for both part of the world right now.
That's right. And can you discuss the role of the OPEC in stabilizing global oil market?
Well, that's very interesting. Historically, OPEC or OPEC Plus, as it is called now, has a lot of weight when it comes to oil markets. Even now, I can't say that they have lost that influence, but their oil price stabilization efforts have so far not, garnered the desired results because of the fact that despite the production cuts, there seems to be a supply overhang in the markets. And something that is called the non-OPEC production from Brazil, from Guyana, from Canada, from US, the non-OPEC production has also started to grow. And anywhere between 1.5 million barrels per day to 1.8 million barrels per day, that is the expected growth that will happen even in 2025 as well. That combined with low oil demand, that creates problem for OPEC and the production cuts because production cuts were supposed to take prices to a stable level. And another interesting thing happening in the US specifically, because US is the largest oil producer, is that many companies have now their break-even prices as low as 60. So, as a tail risk, I see that there might be a redo of the oil price war that happened back in 2014. If oil prices don't stabilize in the next few months, then OPEC plus production cuts cannot go on forever because these countries are facing budgetary issues. Saudi Arabia registered a budget deficit in the previous 2 years, and same for other countries. So that's a very interesting dynamic to watch.
Donald Trump has repeatedly urged the European Union to increase its purchase of US energy, in particular LNG. How do you see this push fitting into the broader context of his tariffs policies on European goods? Is there a potential conflict between these two goals?
Well, as I just explained in detail, European Union and America seems to be getting well together when it comes to trade, and there is a lot of uptick that has happened in both LNG oil and otherwise as well. So I think both sides need to sit down to come up with to identify further areas or avenues of cooperation and collaboration where they can help each other out. And that said, Trump's tariffs and the war of words that always carries a downside to it with the chances of retaliation from the other end. And if that retaliation is to happen, that might hinder or obstruct what we were just describing as the growing trade between both sides, which will not be really helpful for either the US and especially the Eurozone, because Eurozone has been in a lot of trouble recently. You look at the PMI indices there, you look at manufacturing there, you look at other macroeconomic indicators, all of them have been pretty problematic, especially in Germany and France. France factory output just shrunk recently. Germany was in a technical recession and it came out of it. UK is not doing very well as well. So I think for both sides, it's better to just carve out a plan wherein they tap into any further avenue that can help avoid a retaliatory tariff and a full-blown trade war.
Well, given Azerbaijan's energy exports to Europe, do you think it could play a bigger role in diversifications of Europe's energy security policy, especially in light of current geopolitical tensions?
Well, absolutely, absolutely. Recently there were talks to rekindle the Qatar-Turkey pipeline as well, and I believe that combined with Azerbaijan and the Southern Gas Corridor, which already provides a lot of gas to Europe. By the way, Azerbaijan is, and when it comes to pipe gas, Azerbaijan is Europe's fourth largest partner with 7% of share, and overall it's 3% of share. So there is a lot of potential. Azerbaijan as I've been there as well. They are tapping into the renewable energy, they're tapping into more gas resources, they're tapping into domestic energy exploration. And Azerbaijan, due to its geographic location, plus its role in the region, stands to benefit a lot from this and can definitely increase an already better relationship with the EU.
And my last question, Turkey and Pakistan have shared interest in promoting energy security and stability in the region. How do their respective roles in the Caucasus and Central Asia align with Azerbaijan's geopolitical objectives, especially regarding energy transit routes and regional security?
So, when it comes to the future of energy in this region, in the Mediterranean, Turkey is poised to be the energy hub because of its vast network of pipelines, its floating storage units, its LNG terminals, and the network it has. And as I just mentioned, the Qatar-Turkey pipeline, there are chances that it might rekindle the Trans-Anatolian pipeline, and all of that. They have the infrastructure. And as we were discussing, Turkey has good relations with Pakistan. And now Pakistan is a country that is full of youngsters, but has a lot of problems when it comes to the energy. Our domestic gas production and oil production is falling, the reserves are falling. And now Pakistan and Turkey and Azerbaijan, and because we have very good relations with Azerbaijan as well. Our prime minister was there a few months ago, and we struck a lot of deals. So these three countries and Central Asia as a whole, I believe, will play a very important role moving forward because as I described, the energy flows are hinting towards a divergence. And I see within this divergence, certain countries or certain regions will further solidify their connections. And we might harken back to the era of what was called the Eurasian continent, right? So Central Asia is poised to play a very big role. And within that, Azerbaijan, I mean, it's doing great. It just hosted COP29. And I refer to the plans. Now, Turkey, Azerbaijan, and Pakistan both have something for each other. And I think that is the best arrangement to have when it comes to international trade deals.
Well, thank you. Thank you so much for joining IDC Talks today.
Thank you so much for having me.